Many people don't like dividend investing because they feel like it takes so long to see results, which I understand. It's hard to get excited about something that's going to take 5, 10, or 20 years to build real wealth. But you will reach a point, and it will come sooner than you think, where the progress you're making becomes noticeable and you'll find that the dividend snowball is really starting to take off. And in this video, I'm going to share with you where this point is, when it happened for me, and what it's going to take to reach this point in your investing journey. Also, I want to give a quick shout out to today's video sponsor, Southern New Hampshire University, but we'll talk more about that later. Now, in case you're new to the channel, my name is Ryan Williams, and here we strictly talk about dividend stocks and how you can invest in them to create passive income and reach financial freedom. So if you love dividend stocks and if you're on a mission to retire early, then hit that subscribe button. I'd love to stay in touch as we both continue to grow our portfolios and collect that cash flow. Now, when you first begin your dividend investing journey, the payments you receive aren't anything life-changing, as you may know. You may be getting a few bucks from SCHD, or maybe you own a couple shares of Realty Income that are paying you like 50 cents every month. We all pretty much have to start from scratch, and I was certainly no exception to that. Some of my first dividend payments were this one right here from Apple, who paid me 79 cents, and here's another one from Skyworks Solutions, who paid me 50 cents. And around this time, in any given month, I was only making like 15 to 20 bucks on average, which we can see right here. I only made about $16 in February 2021, which on one hand was super cool because this was $16 I didn't have to lift a finger for, okay? This was my first real taste of passive income, and I was so stoked, don't get me wrong. But on the other hand, it was only $16, and when reinvested, this wasn't going to make a huge difference for my portfolio. But still, going into this, I understood that a successful dividend portfolio is built brick by brick, taking baby steps forward, one at a time, at least at first. I knew that this was something that would be a slow burn in the beginning, but with consistency in time. I also knew that these $16 months would grow into a number much larger, but I really underestimated how quickly this would happen. Just a year later, in February 2022, my $16 month from the prior year 10x'd, and I brought in over $160, and it would be only 8 months later in November that I would go on to make over $200 in 1 month just from dividends. Along with this, as I'm sure you can imagine, the payments I'm receiving now from each individual company in my portfolio have grown much larger as well, and the 50 cents and 80 cents I was receiving when I first started have grown to become more like $28, $35, and even close to $50 in some instances. And now when these payments are reinvested back into my portfolio, they're really starting to pack a punch, and in some cases can actually buy whole shares of stock. If we take a look here at my dividend portfolio tracking spreadsheet, which you can start using for free, there is a link to it in the description of this video. If we take a look at this column right here, it will show us how many shares I'm able to buy of each company just from dividends being reinvested. And looking at a few examples of this, starting with EPD right here, every year just from dividends being reinvested, I would be able to buy an extra 5.66 shares of EPD. And since they pay every single quarter, basically every time I get paid, I'd be able to buy 1.4 shares of EPD just from dividends being reinvested. And because each share of EPD pays $1.96, if I reinvested all of those dividends and bought the extra 5.66 shares, that would give my dividend income an automatic boost of an extra $11. Taking a look at another example, Altria Group, every year I'm able to buy 4.21 shares just from dividends being reinvested. So every single quarter, if I reinvest the dividends, I'd be able to buy just over one whole share of Altria Group, and because every share pays $3.76 in dividends, that can automatically boost my dividend income by an extra $15.75. And another example, ORCC, which is one of the highest yielding stocks in my portfolio, it has a forward yield of 10.46. With dividends reinvested, I'd be able to buy 10.5 shares of ORCC every single year, and because every share pays $1.32 in dividends, that would automatically boost my dividend income by an extra $14.25. And this last example, AT&T, with dividends reinvested, I'd be getting nearly 6 shares every single year, and because every share pays $1.11, that would automatically boost my dividend income by an extra $6.45. Which, if you add all this up, it means that just from these 4 positions where I'm getting at least one whole share's worth of dividends every quarter, it is raising my portfolio's annual dividend income by nearly $47.50. And this is the point where the dividend snowball really starts to take off. When you reinvest your dividends and they're able to go and buy whole shares of stock, this, to me, is when it feels like it's really starting to make an impact. And I want to show you a few examples of what it might take to get to this point, but first, I want to tell you about today's sponsor, Southern New Hampshire University. Now, as someone who actually didn't finish college and most certainly wasn't after a degree in finance when I was going, there are times where I don't feel the most qualified to talk about some of the topics we cover here on this channel. Because of that, I'd be lying if I said I'd never thought about going back and finishing my degree. And if you feel the same, if you feel like your experience is holding you back from pursuing the career that you really want, then I am so excited to tell you about today's sponsor, Southern New Hampshire University. SNHU has one of the largest accredited nonprofit online degree offerings offerings in the country, and I want to talk to you specifically about their finance program. In this program, you'll learn to identify long-term corporate investment opportunities to increase shareholder value. You'll learn to apply theories of asset allocation, security analysis, and portfolio diversification to efficiently manage an investment portfolio. You'll learn to utilize the rules and regulations for financial accounting and reporting in a global economy. You'll learn to generate financial records and financial statements for users in accordance with governing rules and regulations. And you'll learn how to analyze, interpret, and communicate financial and accounting information to internal and external stakeholders. SNHU is radically affordable, with their tuition rates being some of the lowest in the nation. Also, when you go to request information about one of their 200 plus different programs, a real person will hop on a call and discuss how the program can benefit you personally. To learn more, go to snhu.edu/Ryan or find the link in the description to see what the current average annual salary is for someone with a finance degree and to request more free information about the program. It only takes one click to find your calling, so once again, go to snhu.edu/Ryan. And now guys, moving on, we're going to take a look at a few different scenarios to see how much you would need invested in different stocks and ETFs to be generating enough dividend income to then go and buy whole shares of those stocks or ETFs every month or every quarter. And we're going to kick it off by taking a look at a few different ETFs, starting here with VU, which is the Vanguard S&P 500 ETF, which has a current share price of just over $362 and a pretty low dividend yield of only 1.64%. And to reach a point where you're able to buy 4 shares every year, or basically 1 per quarter with the dividend payments, you'd have to invest over $88,000 into VU, which basically would get you about 243 shares, and this would be generating nearly $1,450 of dividend income. And with these 4 shares reinvested, that would boost your annual dividend income by nearly $24. Now moving on to our next example, we'll take a look at SCHD, which I think is the holy grail of dividend ETFs, and they have a much lower share price than VU, sitting at $77.50, and a much greater dividend yield at 3.3%. Now to reach a point where your dividend income is able to buy 4 shares of SCHD every year or 1 per quarter, you'd have to invest $9,404, which is much less than VU. And with this dollar amount invested, you'd have about 121 shares of SCHD, and you'd be bringing in $310 of annual dividend income. And when you take these 4 shares per year that you bought with your dividend income and reinvest it back into the position, that would give your portfolio an annual dividend income boost of $10.24. Now for our last ETF example, we'll look at JEPI, the JP Morgan Equity Premium Income ETF, which has a share price of $55.41 and a very high dividend yield, much higher than the last two of 11.5%. Now for your dividend income to go and buy 4 shares of JEPI for you on autopilot every year, you'd have to invest less than $2,000 into this ETF. But the thing about JEPI is it's actually a monthly dividend payer, so I think we should see how much you would need to have invested to get 1 share every single month. And you can see here that now to get 12 shares of JEPI every single year, you would have to invest still not that much money, $5,786. This dollar amount would get you 104.5 shares of JEPI and would leave you with an annual dividend income of $664, which when reinvested back into the position to buy 12 more shares would give your portfolio an annual income boost of $76.32, quite a big bump. Now the takeaway here is that obviously the higher the stock's dividend yield is, the quicker you'll reach a point where those dividends can be reinvested to go buy whole shares of stock every month or every quarter. But I want to make something clear, that's not to say that you should just go out and buy only super high yielding stocks like JEPI and Altria Group. In fact, I think that's a pretty bad strategy. More than anything, you should be investing in good companies that are at an attractive valuation, and I'm going to be telling you about a handful of those in this next video right over here. All 5 of the dividend stocks in this next video are great companies that have really come down in share price and are currently sitting at 52-week lows. I think they're great ones to consider for any dividend investor looking to expand their portfolio, so check them out right here, and I'll see you in the next one.